Good morning, everybody. Happy Thursday. It's June 8th, 2023. Great to be with all of you today. My name is Bob Lang, and I run explosiveoptions.net. And welcome to our bi-weekly Daily Bites. We get together with you every Monday and Thursday morning, roughly around 8:30, 9 o'clock in the morning. So sorry, running a little bit late today. Had a little bit of a delay with the data. I was taking a look at it. Jobless claims came out a little while ago, and we saw a little bit of a bump up in that. So futures rising a bit as well. We'll talk about in just a few moments what that may mean for next week. But as we see here, S&P 500 futures are up just fractionally here this morning. The NASDAQ recovering some of those losses from yesterday. We did have a nice upgrade on Amazon today to a buy rating, top pick basically from one of the research analysts out there, and gave a 158 price target. We see the Dow Industrials down a little bit. And we'll talk about the Russell 2000 here in just a couple of moments. But I do like the action in the markets more recently, especially if you guys have been following along with me either in the room or on Twitter. The big winner that we've had for the past week and a half has been Tesla. We've hit that thing about 4 times in the past week and a half. I'm out of most of it now. I have a few left for June 30th, a few runners, but for the most part, we dumped just about everything we had yesterday morning when the stock was pushing 230. It closed a little bit below there yesterday, but that's been a huge winner for us since I think it took off at about $192 or $193. We got up to 202. Once it got past there, I even mentioned on Twitter, I said, once it gets past 202, it's got some clear sailing. It's got some upside to go. So hopefully some of you guys manage to get on board and make some money on Tesla. So let's take a look at the markets over here. Again, we're coming off of a modestly overbought condition, and in fact, that overbought condition was pushed even higher yesterday. Even though the Nasdaq was down sharply and the S&P 500 was down sharply, with the Russell 2000, it's an unbelievable. Last 5 days, this Russell 2000 is up over 8%. It's a crazy move up. And of course, we had that big, huge move on the Dow Industrials last Friday following the jobs report. It fell back a little bit on Monday and Tuesday, but regained some of its losses yesterday. We still like the markets here right now. It's constructive. However, I would caution lightening up quite a bit going into next week. And why is that? Well, we have a couple of things going on next week. Of course, we have the CPI number, which comes out before the market opens next Tuesday. We'll talk about that on Monday's Daily Bites. And we have the PPI, Producer Price Index, coming out on Wednesday morning before the market opens. Those 2 days as well, congruently with the Fed meeting, which starts on Tuesday at about 11 a.m. Eastern time and concludes with a policy statement at 2 p.m. the following day on Wednesday. So we have the Fed meeting starting the day CPI is released, and we have the Fed meeting ending with a policy statement and a press conference by Chair Powell later on the same day that Producer Price Index comes out with that number for May. So according to the Cleveland Fed nowcasting, let's take a look at that here. What are they? What is the Cleveland Fed nowcasting looking for next week's CPI and so forth? As you can see down here on the bottom left of this table, 0.19 month over month. Okay, let's annualize that. What do? You multiply that times 12. Crude way here, 2.28%. So we're if this number is right, if they come in at 0.19 or 0.2, it's coming in pretty close to the Fed's objective of 2% inflation, right? Which kind of makes maybe makes a little sense. But of course, the month-to-month numbers are pretty volatile. We had a very low number back in November of last year, and then inflation started taking off again and came back down. So it's a pretty volatile number. When we look at the core CPI number, it's still elevated above 5.5%. The core PCE at 0.38, but the personal consumption expenditures only about 2.5%, which is fairly low on the headline number. So it appears to me, and it appears to probably a lot of you, that inflation coming down very slowly, but is actually coming down, probably due to supply chain issues being resolved and the Fed raising interest rates and demand starting to recede a little bit. We did hear from the CEO from Bank of America last week saying that he thought that consumer spending was starting to slow down. We heard that from Signet Jewelers this morning as well, and a couple of other retailers along with them. So, maybe inflation is coming down, and maybe the Fed could take a pause next week. Well, let's take a look at the Fed watch currently right now. The Fed funds futures are portraying at this time about a 1 in 4 chance that the Fed is going to, or about 1 in 3 chance that the Fed is going to raise a quarter of a point next week. So that's 20, almost 30%, 70% chance that they're going to pause. But then we look out to July, which is probably much more of a live number than that one. And we see that it's about a 50% chance that they're going to raise interest rates in July at the July meeting, which is the 26th. Now, after next week's meeting, there's only 4 Fed meetings left for the rest of the year. And more than likely, the Fed is going to if they eventually, with the next couple of meetings, they're going to pause until the rest of the year and see how things play out. Now, one thing that we have to remember is that the economy, for the most part, is actually been pretty strong and has been pretty resilient. And how do we know that? The jobs market. We saw that last week with a very, very strong jobs report, wages starting to come down a little bit. It was actually a very good jobs report for the Fed, even though I'm sure they would like to see less strength in job creation. We had 336,000 new jobs created in May. I think they would like to see that number come down still. I think the fact that wage inflation coming down over the last month or so was an encouraging sign. So we'll see how that translates into the June numbers, which come out just after the 4th of July holiday. And of course, those inflation numbers next week are going to be extremely important. We'll have retail sales the following week as well. So let's take a look at a couple of charts over here for a minute. So the new highs, new lows on the S&P 500, ticking up above 100 for a couple of days in a row, and then we had so we have actually this indicator is actually on a buy signal for now. So we'll see if that remains. The impressive chart I want to show you, as I mentioned when we first started here, was this Russell 2000 IWM. Look at this move from last Thursday, which we were about 173. Now we're at 187. That's an 8% move in roughly 5 sessions, right? Now, you could attribute some of that to short covering, but I'm telling you something. This big, huge bar that we had on Tuesday was super impressive. And then yesterday, when the rest of the market was faltering, the Russell 2000 was a standout. So you have to acknowledge that this index here is certainly leading the rest of the market. And we often see when we get broad participation in the market, of course, the Russell has 2,000 stocks, even though they're small caps, there's still a lot of participation here. 2,000 stocks can really increase your breadth of the whole entire market. And of course, yesterday we had a breadth reading of 19 to 10, 19 positive versus 10. Now, NASDAQ stocks, a lot of NASDAQ stocks were down yesterday, yet we saw this breadth figure extremely positive. Nothing like gobs of breath, as Tom McClellan would say, to inspire the markets to go higher. But as we see this bifurcation occur, which means a separation of small caps and actually the Dow Industrial Average versus the S&P 500 and the NASDAQ, we see this separation occur. It's not very healthy for the markets. But let it be known that, we can certainly identify cracks in what might happen to the markets, but it may not actually work on our time frame. So the NASDAQ was weaker a little bit yesterday. We saw the Vixen, which is the NASDAQ volatility, starting to rise yesterday. We also saw the VIX, which was on the rise yesterday, close just under 14% for the second straight day. It's amazing how low this VIX has gone, but there really is nobody out there who believes the market's going to go down, so they don't buy any protection, right? And I think that that's a mistake. We're still in the throes of a bear market until further notice, and you've got to have some protection on. I don't care if you lose money on it. Having that protection on is absolutely crucial and critical to have. So I'm sorry I've started a little bit late over here, but we're gonna wrap it up over here right now, and I'll probably have more on Monday. We'll be talking a little bit about the Fed and about the inflation readings and so forth. And have a great day trading. And listen, if you're in the chat room, I'll see you there. And again, we like Tesla. I'm looking at Netflix, Amazon today as well too with their upgrade. And tomorrow we have Friday, and we have following week. I'm jumping ahead. Nice, another 3-day weekend coming up for the markets, as June 19th is a market holiday. So have a great day, everyone. Have a wonderful weekend, and I'll see you guys all on Monday in the chat room. I'll see you there a little bit later. Take care. Bye. Turn it off.